Okay, guys. So we're talking about inverse fair value gaps. It's pretty much just failed fair value gaps, right? Price goes ahead and disrespects a fair value gap, closes below it, and induces some form of motion in that other direction, right? You can see we're closing through these gaps. We're continuing down for a little bit, closing through these gaps, closing through these gaps, so on and so forth, closing through these gaps, inducing some movement to the downside, right? So we can think of this as some form of change of direction, right? As you can see, we were currently buying. We close through, we start selling. We're buying, we close through, we start selling, buying, close through, we start selling. Okay. But just like everything else when it comes to trading, we're not taking action off of just one thing. These are just confluences that are going to stack and give us a bigger picture at the end in which we can then act upon. Okay. Let's find some bullish gaps or some bearish gaps getting closed through. Okay. And guys, size of fair value gaps don't matter as well. Just got to put that out there. Doesn't matter the size, right? As long as there's a gap between that second candle, like this one, it's a small one. And as you can see, we're closing through it. So price closes above. And this is why I say it's important to magnetize to that wick. So we're not lost, we're not confused, and we know that price is closing through it. So right here, short term, we were selling. We closed to that gap. We start buying. We change direction. Okay. Find more examples for y'all as well. Same thing right here, right? We have a sell gap. We close through it. Price starts buying. Okay. So this is what an inverse fair value gap is. Market flips its order flow, right? So for us to obviously take action after this, we're going to need some form of confirmation, right? You're seeing momentum. You're seeing price displace through it harshly. These are also good signs, right? As you can see, price is pushing through this gap really aggressively. And it's also leaving a gap of its own, right? Stacking on that, just giving us a double confluence. So this is what we talk about when we mention confluence trading, right? Not just do we have this inverse gap, but now we have this gap stacking on top of that, giving us more reasons and more confidence to take this trade. Okay. Perfect. Cool. So that's one way that price likes to flip and change direction. Another one price likes to do is also a break of structure. Okay. So it's the structure shift, right? So for example, we're going in bullish structure, as you can see, or bearish structure. So we're going down, we're making lower highs, right? As you can see, so we have higher high, we have a lower high, we have a high lower than this high, right? And then eventually what happens? This high gets closed through. So not just did this gap get closed through, but this high gets closed through right here, which signifies a break of structure, which is also a change in the direction of market, a change in the direction of order flow. Okay. So our highs and our lows are getting broken as well, right? And markets confirming these directions. As you can see as well, this is now another reason, right? So confluence trading, yet again, we have an inverse gap. We also have a break of structure. It's more reasons for price to continue in the upwards direction. Okay. Let's go ahead and also take a look at this. One thing you got to know is when you're mapping out these highs and lows, whether it's for the sake of liquidity, whether it's for the sake of breaking structure, whether it's for the sake of anything, liquidity rests at these highs and lows. Structure is getting broken at highs and lows. And these highs and lows are every individual green candle followed by every individual red candle. Okay. I'm not going to overly stress it. You're going to have to listen, right? And you're going to have to go and test this out on your own. Just give yourself even more proof. Every single down and an up candle is a low. This plays the same role for both liquidity and break of structure. Every single down and up is a low. Every single up and down is a high. Okay. So there you go. That's very, very valuable information. People pay thousands of dollars just to get that simple information right there. But there you go, right? So you need closes above this, right? So price needs to close it, not just wick it. So like here, just hitting this is not a break of structure. The break of structure happens with this candle when we close above it. Okay. Same right here. This is just a wick. This is not a break of structure. A break of structure is going to take place right here when price closes below it. Okay. So that is our break of structure, stuff like that. And we can tend to look at it within trends as well, right? So as you can see right here, we shift structure, we start trending downwards, but then look what happens. This high right here, a singular green followed by a red, gets broken through, break of structure, price starts going in the upwards direction. Okay. Like I said, I'm going to continue stretching this out. We're not taking trades based off of one thing. As you can see, everything is starting to flow together so we can see the bigger picture of the charts and what it takes for us to trade and how price is moving. But there is still a way that we are going to actively take these trades, and we will get into that. Okay. Cool. So we've identified breaker structures. We've identified inverse gaps. We're now able to map them out. Next, we're going to talk about order blocks, breaker blocks, and just blocks that move markets. Okay, so these are going to be institutional levels, right? But they're just going to be blocks just to simplify them out, because obviously we have candles on our screen and not actively seeing multiple numbers, even though we have numbers right here. But that's our next lesson. We're going to talk about that, order blocks and breaker blocks. So I'll catch y'all in the next video.